throughout the press conference. Kindly unmute yourself as soon as we announce you. We request one question from each media house to accommodate everyone over the next hour. In case you get disconnected, kindly rejoin using the same link. With that, let me invite our Chief Executive Officer, Mr. Salil Parekh, for his opening remarks. Over to you, Salil.
Thanks, Rishi. Good evening to everyone joining. Thank you for joining us on this Sunday evening. We had an excellent start to the financial year with 5.5% sequential growth and 21.4% year-on-year growth in constant currency terms. We continue to gain market share with our COBOL cloud capabilities and the differentiated digital value proposition for our clients. Growth continues to be broad-based across business segments, service lines, and geographies. Each of our business segments grew in double digits, with several of them growing at 25% or higher. The US market grew at 18.4%, and Europe grew very strongly at 33.2%. Our digital revenues were 61% of our total in Q1, and they grew at 37.5%. Within digital, our cloud work continues to grow faster still. Our operating margins were at 20%. Our large deals at $1.69 billion in Q1, which comprised of 19 large deals. 50% of these were net new. Our quarterly attrition declined in Q1. We had a net headcount growth of over 21,000 employees within the company. With a strong growth in Q1 and our current outlook on demand, opportunity, and pipeline, we increased our revenue growth guidance, which was at 13 to 15%, now to 14 to 16% growth for this year. We keep our margin guidance at 21% to 23%. With the increased cost environment, we will be at the lower end of the margin guidance. Thank you, and now back to you, Rishi, for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. With that, we have the first question from Anisha Jain from ET Now. Anisha, kindly unmute and ask your question. Anisha? Anisha, kindly unmute and ask your question. Anisha, kindly unmute and ask your question.
Good evening, gentlemen. Congratulations on a great set of numbers. Am I audible?
Yes, Anisha, please go ahead.
Can you hear me?
Yes. Yes, we can hear you.
Good evening, gentlemen. Thank you so much for taking my question. Salil, first question to you. Rest of your peers and the entire industry is talking about a lot of headwinds, which is actually not visible with the numbers that you have really reported. Do you think that effect will come with a lag and there will be a bit of slowdown when it comes to the second half of the year? And Nilanjan, a question to you on the margins. You said you will be at the lower end of the margin. What kind of levers do you see to defend that? Because this quarter, of course, the margins are lower than expected at 20.1%. How do you plan to scale it back to the 21% level? Thank you.
Thanks for your question, Anisha. I think what we see is the growth that we have. We are gaining market share. At 5.5% for the quarter or 21% for the year, we are significantly ahead, leading the industry in growth. And this is coming primarily from the positioning of our capabilities, which are resonating with our clients, both on digital and cloud, and the overall approach to One Infosys. So we think this is something that differentiates us in the market, and that's the reason why we're seeing growth which is higher and leading the industry.
Yes, on the margin question, as you know, of course, we've given a margin guidance at the beginning of the year at 21 to 23, and we've ended this quarter at 20%. I think coming from Salil's answer, I think we are seeing the growth traction in the market, and we really are clear that we must absolutely put everything behind getting this growth. So whether it's in terms of starting from hiring, we've done a record hiring 21,000 during the quarter. This is higher than any of the top 5 other peers in this industry for the quarter. We have also put in our compensation hike from quarter 1 itself, and that has impacted margins by about 160 basis points. We have also actually put in because of the impact of new freshers coming in, the utilization has gone down. But these are all investments because we know in the long run we can actually optimize these costs. But we don't want to leave this demand on the table. And of course, we know there's a massive supply crunch. Therefore, in a way, these are the flip sides of the coin. But we are very clear we will get the demand. We will invest behind getting this the demand side sorted out. At the same time, work on the cost levers. And so coming to the 21 to 23%, we are going to look at, of course, much more aggressively looking at utilization. Subcon during this time we have built up because of this demand. We will look to optimize that over a period. Automation continues to be a big driver for us every quarter when we replace people from those projects into new projects as itself. Looking at the pyramid, like I said, the fresher benefits will come into our pyramid. We talked about the beginning of the year, hiring more than 50,000 freshers. So these are all the levers which we have, like I said. So we will actually go and get profitable growth. We will invest behind this growth and, of course, take out cost inefficiencies as we move along.
Thank you. The next question is from Rima Tendulkar from CNBC TV18. Rima, please unmute and ask your question.
Thank you very much for that. I think my first question is on deal wins. Deal wins have fallen by 25% on a quarter-on-quarter basis. Can that be read as a reflection of slowing demand, the uncertain economic environment that you referred to? Because deal wins are seen as a proxy for future growth. So can you talk about what is happening on the deal front and the deal pipeline? And Nilanjan, can we say at Q1 margins of 20%, have they bottomed out? And what would be the outlook from here on? Because there will be some further hit on account of wage hikes. And do you think you will be able to hire more than 50,000 freshers, given the supply crunch that you're facing? Thank you.
So thanks for the questions. On the deal wins, we see the large deals, which are always volatile, some quarters high, some quarters low, because these are deals which are typically over $50 million in size for us. And we've had a good number in terms of 19. What we see today is the pipeline for deals, large deals, is larger than what we had in the last 3 and 6 months. So the demand outlook is good. Of course, the environment, as we've referenced in our press note, is different. There is talk of recession. There is increase in interest rates. And there are some pockets where we see this, for example, in the mortgage business, in our financial services area. There are pockets where we see some of this impact coming in. But the view for us today, given what we see in our pipeline, is the overall pipeline is strong at this stage. But of course, we're watching out for what can happen as the environment evolves and changes.
Yeah, so coming back to your margin question, of course, if we are going to be at the bottom end of our 21 to 23 and we are at 20, we will expect margin expansion from here on. And like I said, putting pressure at the pyramid is one way of doing it. And in the fact, that's a source we've been from last year when we put 84,000 in. I mean, that's a source we will build. We will take a hit on utilization, but we know over a period of time we can actually improve the utilization as more and more freshers go into the system. We can't suddenly pack in all projects, but that's an investment we are willing and absolutely open-minded making into the pyramid itself at the beginning. So that's a source of us for improvement of our cost structure going forward. And like the other levers I've mentioned about already in terms of mix, in terms of pricing, we are also looking at how we continue to push the pricing question with our clients, whether it's in terms of looking at discount reductions, whether it's in terms of renewals, whether it's in terms of COLA increases. So that discussion is on. Of course, there's no quick win coming immediately from that, but that's an ongoing discussion which we are having with our clients.
Thank you. The next question is from Sajith Mangat from Bloomberg Quint. Sajith, please unmute and ask your question.
Good evening, gentlemen. My first question is to Salil. Salil, you spoke about increasing your guidance range to 14 to 16%, but at the same time, your TCV wins has been much lower in this quarter. Is there a reason for that? And the second part is that you're talking about recession talks, which may impact BFSI going forward. Given these scenarios in place, do you think this is a conservative 14 to 16% guidance that you have given? What is the other headwinds that you see going forward? And for Nilanjan, 20% margins you hit this quarter, but you're saying that you'll be maintaining 21 to 23% and remaining at the bottom end of that range. How confident are you to maintain that kind of margin? And what is the kind of outlook that you have for hiring this year?
So thanks, Sajid. I think the view we have today is we see that our Q1 was very strong with 5.5% growth sequential. All of this is essentially organic growth. We see good volume in what we are seeing in terms of the pipeline. For us, large deals are always volatile, some quarters up, some quarters down. But the overall pipeline for our large deals remains strong. So at this stage, looking at where we see the demand, we increased our growth guidance for the full year. Yes, there are pockets, as I referenced before, where we see, of course, the impact coming in some areas, but we are not seeing it across the board. Each of our sectors have grown well, many of them over 20-25%. Geographies have done well. We've had very strong growth in Europe, strong growth in the US, strong growth in the rest of the world. So we feel at this stage that gives us the comfort to increase our growth guidance.
Yeah, so again, I mean, repeating on the margins, I think like we are at 20%. We've taken a 1.6% wage hike. We've taken a hit of 40 basis points on utilization this quarter. We've taken a 30 basis points on subcon hit as well. So these are the three big hits we've taken. Now going forward, we have a marginal wage hike coming in Q2 for our more middle to senior people. But then all our cost optimization, the freshers kicking in, the utilization kicking in, look, pricing, automation, I think those will all start kicking as we go ahead. So in our 21 to 23 and being at the bottom end of that, we are quite confident.
Thank you. The next question is from Kushal Gupta from Z Business. Kushal, please unmute and ask your question.
Yeah, sure. Good evening, gentlemen. So, Salil, I'd ask about the demand outlook first to you because, I mean, US and particularly Europe, if we see, there are things like inflation and other concerns, particularly on the growth factor. There are fears they going into recession. So probably maybe the demand outlook might be slowing down there going ahead. So are we looking at other geographies to grow and keep our pipelines healthy? And secondly, on the localization front, as to how are we moving ahead with localizations in Australia and other geographies as well? Thank you.
So on the other geographies, I think we have within our pipeline a good demand outlook on large deals within the US market, within the European market. We've seen really strong growth this quarter in Europe. Yes, we are looking at other geographies. We've had historically a very good business in Australia, which also has today a good pipeline. We continue to expand with strategic partnerships in Japan and in Singapore. So those are markets that we are looking at, and those have been some of the markets that have been part of our sort of strategic plan as we've gone through this. Even within Europe, we did an acquisition a few days ago that we announced, which was a company focused on life sciences in Denmark. So we're looking more and more at Denmark and countries in the Scandinavian region, which are giving us good growth and also good opportunity. So those things will continue across the different geographies we talked about. In terms of localization, that's something that has been an ongoing program that we've driven. A lot of it has been driven, as you referenced, in many of the Western geographies in the US, in Europe. It is also something that is moving along well in the Australian geography.
Thank you. The next question is from Sumit Mehrotra from CNBC Awaz. Sumit, please unmute and ask your question.
Good evening, gentlemen. My first question would be for Salil. Salil, top 5 client contribution has increased substantially on a Q-on-Q basis, despite we have seen a low client addition. So how do we read this, first of all? And for Nilanjan, we have raised revenue guidance for FY23 to 14 to 16%, but margin guidance remains unchanged, and it was lower 100 basis point last quarter. So, can we say margin has stabilized, or we see some more cost escalation going forward? Thank you.
Thanks, Sumit. I think on the first point, in terms of the top five, we are seeing really strong traction with our large clients, where we are expanding, working on big digital and cloud transformation programs. So that gives us that sort of an impact across those five at this stage. On the margin, let me pass it on to Nilanjan.
Yes, so I think, of course, from an overall supply environment, I think you're all seeing the numbers from the industry in terms of attrition. Of course, we have seen a moderation over the last 3 quarters. In the first, in Q4, it was stabilizing. In Q4, it actually came down by about 5%. This quarter usually is a very seasonally high attrition, but despite that, we've actually seen a 1% drop. So one thing, of course, as we are putting in more freshers, the industry puts in more freshers, we will see that benefit flowing through as well. But the reality today is attrition is higher than what we would like. But then, of course, we have to go and invest behind the talent. We are paying some stretch salaries in cases where we are going outside. We are paying a compensation hike after last June. So in 9 months, we have done our next compensation hike earlier in a way, than some of the peers. But we are ready to invest, like I said, because this growth is strong, as Salil has mentioned, at 5.5% and 21.4%. It is industry-leading growth. We want to continue to invest there. And then, of course, going forward, we will have these cost optimization levers we will continuously deploy.
Thank you. The next question is from Joshel Mendonça from ET Prime. Joshel joins us on audio. Joshel, kindly unmute and ask your question.
Good evening, gentlemen. Congratulations on the spectacular results. I have two questions. Mr. Parekh, first on demand, you said the pipeline is better than it's been for the past 3 and 6 months. Could you give me some color on what may be driving the improved pipeline? Are there particular verticals or business units that are showing greater resilience? And Mr. Roy, the second question is on pricing. You said you're having these conversations with clients. In the past, when the rupee has depreciated significantly, clients have asked for some of those gains to be paid back to them. How is the rupee depreciation factoring into the pricing conversations you may be having?
Hi, Joshel. Thanks for your questions. On the pipeline, what we see are really two types of big programs. There's a large deals pipeline. One is where clients have embarked or are embarking on their digital or cloud transformation journey. So there, for example, there are clients which are working on their supply chains. There are clients that are working on their customer connects. There are clients that are working on optimizing their financial processes. And these are very strong programs that clients have launched. These give them tremendous impact in their end market or efficiency in their business. So these are critical programs. There are cloud transformation programs where clients are seeing benefits from leveraging a Cobalt capability on a private cloud setup. Are they seeing some benefit with a public cloud transformation across their whole infrastructure? And these need a lot of work in their driving some of the large deals. And then there is a set of deals which are focused on cost and making sure that the efficiency that the clients are looking for are coming through. So we have strength in automation. We have strength in what we call applied AI, artificial intelligence. These are things that we use to make sure that we can optimize the landscape, the technology landscape for our clients, and that gives them a cost benefit. So both of those are things that we are seeing in the pipeline. And given the environment, there are drives for growth and there are drives for cost, which are giving us a benefit. There are nuances across different segments. We still see some strengths which are visible. For example, in our CMT segment, we see strengths in our manufacturing segment. Financial services segment overall is solid with some pockets that I mentioned earlier, for example, in mortgage, where we see some areas of weakness. So the overall picture that we see, both sorts of deals are in the pipeline on the growth side and the cost side.
Yeah. So on your question on the rupee depreciation, of course, I think in a normal period you would be having these conversations, like you said, but these are highly abnormal times. We have seen wage inflation across the world, the consequent impact on attrition as well, and clients are very well aware of that because they are seeing that in their own domains, in their own set of people, right? So in that sense, we are seeing much less of people asking us for discounts, etc. They are aware, of that impact. So we are pushing back as much on that, and we've seen a very lesser impact of that. And in fact, the more the conversations about how do we start giving COLA increases against accounts when the accounts come for renewals, can we get a price hike on our digital rate cards, etc. So those are kind of conversations we are happening. We have not heard anything more about the rupee and the dollar really.
Thank you. The next question is from Shilpa Fadnis from the Times of India. Shilpa, please unmute and ask your question.
Good evening, gentlemen. Infosys has many contracts on long-term basis, especially on fixed price, that could throw up surprises given the inflation-related and wage-related increases. So with cross-currency headwinds, do you think there is scope at all to have a higher realization on these contracts, especially given the uncertainties? And my second question is on revenue productivity. It's come down sequentially by $1,200. Also, what you spoke about the growth and market share gains, it's coming at the cost of margins.
Yeah, so maybe I'll take this, Salil.
Yeah.
Okay.
Please.
So I think first, like we mentioning that this growth, we are ready to invest behind this growth because we know we have the optimization levers. For instance, our subcon, which used to tend, a year and a half, 2 years back at 6.5%, we are closer to 11.1, 11.2. Now that's a lever we know we'll get our freshers in, we'll get our lateral recruitment in, attrition will come down, and we'll be able to replace this. But at this moment, in a way, we are on a treadmill, and therefore this whole subcon increase. So that's easily one lever which we have available. Utilization, deliberately we brought it down because we want freshers to be hired. We want them to go to a training in Mysore in 4 months. Then we put them on the bench, and over a period of time they start getting deployed. And these are therefore investments because you just can't get freshers and overnight start changing the overall pyramid. And that's an investment we are ready to make, really. Coming back on your fixed price issue, absolutely. So when we model our contracts over a longer period of time, we build in wage inflation. Of course, we build in what are the automations we can do there, the on-site offshore mix, that's a lever. The extra work which we can also get from many of these clients, because once you're sitting front and center in a large deal, you pretty much have a ringside view of what's happening inside the clients. And many of our add-on deals which we get because of the clients, because we've done the large deal, are at significantly higher margin. So there's a lot of other tools which we have to see overall the margin profile, both of the deal and around the deal as well.
Thank you. The next question is from Chandra Ranganathan from Money Control. Chandra, kindly unmute and ask your question.
Yeah, thanks. Salil, just want to know the kind of projects that you are seeing, that's given you confidence to kind of increase the revenue guidance annually, because a lot of analysts believe that in the current market, clients will look at cost savings project. It will not be, the discretionary transformational spend that is happening. So anything different that you're seeing that's kind of giving you the confidence? Also, attrition, you say it's moderating, but it's still inched up quarter on quarter. So will this kind of be the upper end for you, and will it now start coming down? And Nilanjan, I didn't get the thing on hiring guidance. So are you sticking to 50,000 or are you increasing it on the back of your higher revenue guidance for the year? Because since you've already added 21,000 in this quarter.
So thanks for the question, Chandra. I think in terms of the demand and the type of projects or programs on large deals, there are two types where there's one which is driven more towards the growth areas on digital, on cloud, and there's a lot of work on cloud transformations that is in our pipeline. And then there's another, as you pointed out, which is focused more on cost and efficiency. And there we are driving from what we have in terms of our leading automation capabilities, what we're doing in artificial intelligence to help optimize the client technology landscape. So we have both of those within our mix. And as we looked at this, even in the previous months, we've made sure that our focus remains on both types of programs. And frankly, we feel in terms of automation, we have a tremendous capability that we think will be of great use to clients in any environment as they look at making efficiency within the tech landscape. On attrition, what we have shared, what we have stated, our quarterly attrition has come down, and we've seen moderation last quarter. We've seen moderation this quarter, and we see as we look out some of the benefits of the initiatives we have put in place that is coming through. That's the approach with respect to attrition.
So your question on freshers. So as we plan the talent model for the year, it's a combination of freshers, it's a combination of attrition, it's a combination of lateral hiring, and of course subcons. So when we put all this together, we of course see at the rest of the year. So at the moment we are seeing about 50,000. It may go up. And the beauty, I think, of COVID is for the industry is now we've been able to get freshers on demand, because earlier the entire industry actually used to lock themselves up with the freshers entirely at the campus, which was in the Jan cycle. So now we have a combination of doing this and the lock-in during the Jan campus hiring cycle. And throughout the year, we have a program which is off-campus running. So that's, I think, a big benefit we've had over the last 2 years to get a much more flexi-oriented talent model for freshers.
Thank you. The next question is from Sankalp Fartiyal from Bloomberg. Sankalp, please unmute and ask your question.
Good evening, Salil and Nilanjan. I wanted to ask you on a very macro level. We saw commentary from TCS earlier, and even they are very confident about a robust deal pipeline like yourselves. Just wanted to ask you, when you talk to clients, is there any color clients are giving you in terms of the macroeconomic worries that almost a number of economists point out in terms of a global economic slowdown and cooling off in tech spending? Because your commentary obviously doesn't point in that direction. But if that happens, how do you plan to reset and optimize resources? That's one. On the second question I wanted to ask was that in terms of hiring, if a tech spend, a tech sort of spending does cool off, do you plan to return? How do you expect to hire this year?
Thanks, Sankalp. I think the second question you broke off. On the first, I think the question was a macro question, if I got it right. Here, I think the way we look at this is, as I shared earlier, there are pockets where we see some changes. For example, I gave the example of mortgages in financial services. There are areas like that. But the prevalent view across a pipeline today is we have a good pipeline overall. Now, looking ahead, we don't have a view on what is likely to happen, let's say 12 months out or 18 months out. Our focus remains really on what we are seeing in our pipeline today and making sure as we finished one quarter of this financial year that we work our way through this financial year, always being aware of the environment, what is going on. But at the same time, when clients are looking for changes, whether they're growth-driven initiatives on digital or cloud, or cost-driven initiatives focused on automation or other areas, that we provide them with the capabilities and the services that can help them. So yes, we are aware and obviously cognizant of what the macro environment is, but we are not that is not what is driving everything in terms of our day-to-day. We see the pipeline, we see what our clients are looking for, and we are making sure we are agile as things evolve, that we can also adapt. The second part we missed out. There was something about hiring. We didn't get the full question.
Sankalp, if you're there, do you want to repeat your second question?
Sure. Can you hear me now?
Yeah, please go ahead.
I was just sort of connecting the second question to the first, and I was asking if at all there is an environment where there's less spending on tech. In that case, like, do you continue to sort of scale up 50,000 fresh, having these people on the bench, any reduction, etc.?
Sorry, again, it's cutting out. Maybe we can come back.
Yeah, Sankalp will try to come back to you. Otherwise, we'll address this offline. The next question is from Sethu Raman from Reuters News. Sethu Raman joins us on audio.
Good evening, gentlemen. Thanks for your time. So I just wanted to year back from like the gross client additions were kind of low on QOQ as well as year on year, and the TCV also saw a bit of softness. And so, is this a starting of the soft period? Is this like because I see that like you said your large client traction remains very good. So I just wanted to know like whether you're seeing some softness in terms of smaller deals are concerned, like adding new clients, and because of the macro environment?
So today for us, the way we are seeing the demand and the strength of Q1 in terms of our overall growth and the volume growth, that gives us the confidence to increase our revenue guidance as we have done. In terms of what we see with clients, in terms of the additions, large deals in our experience are volatile. Some quarters they are high, some quarters they're low. But the pipeline for it today looks in good shape. That's what's giving us the view in terms of increasing our guidance.
Thank you. The next question is from Sai Ishwar from the Economic Times. Sai also joins us on audio. Sai, please unmute and ask your question.
Hi, gentlemen. So, Salil, one question for you would be you spoke about attrition. You're willing to arrest attrition to special initiatives. Could you tell us like how what are these initiatives, and also on LTM basis it's climbed up. So once the annual cycle has hike cycle has finished, so do you see that inching up on a LTM basis continuing? And also, profit has fallen on a QOQ basis. So could you tell us what is the reason there? And also, one question for you, Nilanjan, is on you said on an overall basis the rupee depreciation won't result in any impact. But in the near term, do you see any benefits because the rupee is depreciated from 76 to 80? So at least in the near term, do you see any impact? Thank you.
So let me start off. Thanks for your questions, Sai. On the attrition, in the previous quarters, we've shared some of the focus that the team and we have put on what we really want to do in improving the engagement with employees. There are areas which are focused on increased opportunities. There are areas which are focused on increased rewards. There are areas which are focused on making sure that there's more stability and predictability in how career progression is managed for employees. And there are areas where we're making sure that all of the training capabilities and facilities are available to develop individuals all through their careers. We have seen much more engagement from employees. There's tremendous flexibility that we have vis-a-vis how we have employees working in the hybrid model. All of these are initiatives that have been launched over the past several quarters and over some years, which we see is starting to give us a benefit. And that's where we've seen on a quarterly basis a reduction in the attrition in the first quarter. Nilanjan?
Yeah. So your first question basically was on the profit decline. And of course, that is directly linked to the operating margin and the sales. And we've talked about the decline of operating margin and the reasons. The wage hike was the biggest. It was 1.6%. This was both on-site and offshore, and these have been higher than what we've done in the past. There's wage inflation in the West as well, so this our compensation hikes in the Western economies was even higher what we've done normally. Even in India, it was high single digit with top performers getting double digit. And like I said, this is an investment we are willing to make. So that's the fundamentally decline in margin, and that flows straight into net profit decline. The second question was on dollar rupee. Of course, there will be some benefits going forward, but like you've seen in this quarter, there's also cross currency headwinds because the depreciation of euro, the GBP, the Aussie dollar, and the Canadian dollar. So in fact, half of our rupee dollar benefit this quarter was eroded by the cross currency headwinds. So we actually only got a 30 bips benefit on our margins because of currency as well. So of course, we should see some benefits of that. But just to make sure that we are modeling in the cross currency as well.
Thank you. The next question is from Haripriya Sureban from the Hindu Business Line. Haripriya joins us on audio. Haripriya, please unmute and ask your question.
Good evening, gentlemen. Much has been talked about numbers, so I'd like to get an update on the kind of traction and the deals that Infosys Metaverse Foundry is getting. Also, in what kind of sectors are you seeing the reception? Also, do you think this offering would give you increased gross margin in comparison with your other traditional offerings? Thank you.
Thanks for your question, Haripriya. I think the Metaverse Foundry is an excellent example of where we have leading capability in the market. We are one of the first, if not the first company to launch this. We have real examples of where this can create positive impact with clients. We already are doing some work on a very few select client situations. So this is starting to be a truly leading capability for us in the market. Having said that, it's something that we put in a view that we talked about when we launched our strategy in things that will develop over time. It's not something that is going to give us a benefit right here in this quarter in terms of large scale, but we see tremendous interest and really good traction in what we are putting together in the Metaverse Foundry.
Thank you. The next question is from Vivek Kumar from the Informist. Vivek joins us on audio. Vivek, please unmute and ask your question.
Hi, good evening. My question is on supply side challenges. So, Infosys gave double-digit salary hikes to employees on an average in average last year. So, given that attrition right now is at elevated levels itself, and we are not sure when it might move back to normal levels, it's far away from that. So, do we expect similar salary hikes this year also, or could it be even higher than last year? And yeah, that's my question.
Yeah, so like I said, we have done a lot during last year as well, June, and we've actually accelerated. And like I said, in 9 months, we've had a March cycle. But at the same time, we are seeing the moderation of the attrition as well. We've also rolled out a more predictable, talent program for our employees. So that will give them much more predictable careers as well. And at the same time, we are getting fresher. So all this should help us going ahead in the future.
Thank you. The next question is from BD Narayankar from UNI. BD Narayankar joins us on audio. So please unmute and ask your question.
Am I audible?
Yes, you're audible. So please go ahead.
Yeah. I'm sure my questions will not please you all, but I cannot stop myself asking them. Firstly, why this press conference is being held on a Sunday? And secondly, why this show of hubris on the issue of non-compete clause? Why have you not honored the summons of an elected government? Thirdly, I think Nilanjan can talk about it. Thirdly, is the salary hike of Mr. Salil in line? Is it in line with Narayan Murthy's philosophy? He had once said it is inappropriate to increase salaries of top executives when lower levels don't get them. These are my 3 questions.
So thank you for your questions. The second one, I didn't get it cut out a bit. The first one was why we're doing it on Sunday. The way we had our board meeting, which wrapped up just earlier today, and given that this was information we were sharing right away in terms of our press note, we thought it was appropriate to make sure we answered questions from anyone from the press that had a question for us with respect to the results. So that's why we had it pretty much as soon as our board meeting concluded. I'm sorry, I didn't catch the second one. The third one relates to me, so I'll request Nilanjan to address.
Yeah, so on the third one, like I said, the board decides very extensively. It does benchmarking. In fact, we've given out a 3-page statement on the reason of the increase in compensation. And I think more importantly, I think the overwhelming support of all shareholders across the world, from promoters to everybody, I think we're close to 98%. I think this, in my view, I would think this would be probably the highest sort of reaffirmation in terms of the compensation for Salil, which has been completely globally benchmarked as well. So I would encourage you to read the statement of as part of the annual results and the transparency we have given around all the metrics around which the reward will be given in the compensation hikes.
The second question was on non-compete and why we have not attended the summons.
On the non-compete, our HR leadership, the leadership from the company are working very closely with the respective authorities, both locally and centrally. Our teams are making sure that the specific position that the company has, which is essentially related to making sure that if and when an employee leaves, the client confidentiality of the work is of utmost importance, is observed. We have no constraints within anything within the company which precludes anyone from choosing what they want to do. And we've had extensive discussions and meetings with the appropriate authorities.
Thank you. The next question is from Shivani Shinde from Business Standard, and Shivani has sent her questions on text. Salil, Nilanjan, I'm going to read it out. For Salil, there are a couple of questions. With guidance of 14 to 16%, can you break the growth that you see in terms of deal nature and pricing scenario? Attrition continues to go up. Will the hiring target be the same, that is 50,000? And the second is, it looks like you and your peers have missed on margin performance, which kind of means that the supply issue is still out of control. How is Infosys seeing the attrition going ahead? And for Nilanjan, what is the headroom for margin improvement and the impact of cross-currency this quarter? Thank you.
Thanks, Shivani, for your questions. On the first one, I didn't understand it. The question was about
the guidance
deal.
of 14 to 16%. Breaking down the growth that you see in terms of the deal nature and pricing scenario.
Right. So the guidance, what we see today, we've had a very strong growth in Q1 at 5.5%. We see good volume growth. And the way we see the Q2 and the outlook on the quarters is a good pipeline for our large deals. Plus, we see good volume today in what we are seeing in the terms of activity in Q2. So based on that, we created the view in terms of the increase in our guidance. In terms of pricing, we see today stability in the pricing. So there was no unusual positive or negative that we've seen in our Q1 numbers vis-a-vis pricing. And then the second one?
That was on the freshers part, right?
Yeah.
So I think somebody else, a colleague of yours, asked that in terms of the 50,000. So last year we have demonstrated a capacity to hire has been closer to 84,000. So we have the capacity to hire, but we, as I mentioned, we do the entire talent model with a combination of freshers, looking at attrition, looking at laterals and subcons. And on the basis of that, we're still at the 50,000 mark, but we can always increase that, like I said, because we have the off-campus hiring program, which we can turn on.
Thank you. With that, we come to the end of this Q&A session. We